David Dowden, how would you characterize the muni market right now? Because most funds are flat to slightly down year to date, and the news hasn't been great with what's been coming out of Puerto Rico and Chicago.
Sure. I would say that the market certainly hasn't behaved exactly as we anticipated from the beginning of the year. On the other hand, when we look at the overall market and where it's heading from here, we're pretty optimistic about relative performance. Certainly the headlines, Chicago, Puerto Rico, are drawing a lot of attention, but we would argue you have to look beyond those headlines to really delve into why there's value in our market today.
All right, so let's stay with Puerto Rico and Chicago for a second. Clearly, those are landmines. So where else are the landmines, and how are you avoiding them?
Certainly, one of the areas that we've avoided this year was the state of New Jersey. If you look at New Jersey, it's the worst performing state within in the market today on an overall credit basis, and that's a name that we kind of migrated away from over the last year and a half. Illinois was a credit that we avoided a pretty long time ago. Once again, our argument has been that while general credit fundamentals are improving, overall there are winners and losers, and it's our job to discern among those.
Where's issuance so far year to date? Because that certainly affects muni prices.
Sure. Issuance is on a great pace this year. We anticipated coming into the year that we would see issuance, which came in last year just over $300 billion, that we would see it by year end at a pace of about 375 or higher. We're on a pace to go over 400 billion at this point, largely driven by refundings.
All right. What about insured issuance? Because people like, especially when you look at what's happening in Puerto Rico and Chicago, you want to make sure your bonds get insurance.
Sure. Insurance was kind of written off for a number of years. People felt that, that the insurers were in trouble and they could no longer be counted on. But they have considerable capital. We've seen a resurgence this year. Year to date, we're at about 7.4% on new issuance. Over the last number of years, we've been sub 5, and we believe we can still get to just under 10% of all new issuance this year.
And what about valuation? Whenever I have a muni fund manager in here, they talk about how cheap they are versus treasuries, so now it's your turn.
Munis are cheap, but you have to be on the right part of the yield curve. So looking at the market just as of last night, 5-year munis are actually trading pretty rich again. They're about 76% of treasuries. What that means is that that part of the curve is not only expensive, but it's going to trade almost basis point for basis point with treasury bonds. As you migrate out the curve beyond 10 years, the ratios go above 100% of treasuries. You're earning on a nominal basis more yield than you can earn in a taxable treasury bond. We consider that part of the curve to still be very attractive.
And then finally, you're a fan of tobacco bonds. Why do you like this particular sector of the market?
We don't know of any other part of the market where you can get the types of yields you can earn on tobacco bonds without really going down into very illiquid parts of the high-yield muni market. Tobacco bonds are what we would refer to as a dollar price game. It's all a function of understanding the timing of the cash flows and how long it's going to take to get paid back. We think that as investors are losing bonds in this market today due to redemptions and maturities, they're looking for a replacement for that yield. Tobacco's their solution.
All right, well, thanks a lot for coming on and talking about it.
Great, thank you.
Thank you for watching The Street.